Hi, this is Joseph. Today is April 24th/25th. So the market opens for trading here in the United States on Sunday. I'm in California. Market opens at 2 o'clock. These are my trades. A total of 328 pips so far. Again, I don't double count. And what I mean by that is that a lot of people, if they take 10 lots on one trade and they earn 10 pips, they'll call it 100 pips. And I guess technically that's what they've earned. But when I give you my performance totals, they're based on the entry to the final targets, regardless of how many lots I execute on these trades. Generally, for the trade copier, I execute one lot, but I'm actually executing more than one lot, of course, on my own personal trades or my own personal accounts. I do trade funded accounts. So these trades are actually executed. All of these trades are executed in the funded accounts, and I have several of them. It's not just like FTMO or my Forex funds. I operate with a total of 3 right now. I do have a 4th account. So let me walk you through these setups here. This is the euro dollar. Again, this is a 5-minute time frame. Basically, let me tighten this up. When the market opened for trading, I'm watching, kind of price jump up here. Here's where it topped out. I've got a bar on the 5-minute chart that I'll highlight right here with my cursor. So you can see this is a pretty unusual bar. At that point, I see a top. I'm kind of watching this range of distribution. The trading strategy or the methodologies behind these trades are primarily accumulation distribution. They're going to be breakouts, of course, and pullbacks and continuation trades in uptrends and downtrends. But it all starts with identifying levels, key levels of support or resistance, primarily with the accumulation distribution, and then analyzing the phases of that accumulation and distribution, which is really analyzing the phases of consolidation. I'll leave it at that point. I'm not going to turn this into a coaching session, so I just want to show you the setups. So I'm watching, these levels, these pullbacks, and watching the obvious trend, lower lows, lower highs, all the way down, and then it finally broke out below that support level on the 5-minute bar chart, which gave me my first entry here at 1.0765. Now I'm going to trade it in situations like this when the ranges are relatively small, and it's not, it doesn't happen every day at about the same time where I get the same type of trade. So that's not how it works. If you've been trading for long enough, you know that it'll cycle. I mean, you're going to get different behavior and different setups sometimes at different times. Generally, the New York session is pretty good for me. So I've already earned 328 pips, and it is 2:30 a.m., 2:37 a.m. California time. So I've got a long ways to go. I'm going to be able to potentially trade more opportunities during the New York session. So we'll see what happens then. I'll probably put out another video later on today with more trades. So it's very possible that I could end the day with like 500, 600 pips. It really depends. I can't say that for sure. Again, it really depends on how many opportunities I get during the New York session. But all of this has happened after the market opened for trading on Sunday. So this trade right here, let me get my totals here. This trade paid me a total of 42 pips on the euro dollar to the downside. 5-minute bar chart. Again, I am watching the 30-minute chart as well. This is a 30-minute chart. So I get opportunities here, but obviously on the 5-minute chart, it was a lot easier for me to get in a lot sooner. If I waited for the 30-minute, all of this would have happened. So most of the movement occurred here on that 30-minute chart, and I was able to get out of the trade. So back to my psychological levels as targets, that's what I'm looking at. I get in here at 65. First target's going to be 50. Well, it blasted right through that on that 5-minute bar. And then it kept going, closed at the lows on this bar chart. And then I'm watching the next few 5-minute bars. Nothing to really indicate that it's going to turn around and bounce and go back up and I should lock in profits. So I waited for the next bar, and here it closes down there towards the 20. It closes at the lows. I waited for another bar, and then it popped back up. And then at that point, I was able to close it at 20. I was targeting initially the 00 as my final target, but that's all the way down here, and it fell just about 5 pips short of that. So it popped back up, and I was able to close out the trade. So from 65 to 20 was the target here on that one, or the trade. And then at that point, I'm flat. This is the pound dollar, and I did pretty much the same thing. So the pound dollar 5-minute chart, again, a break below that support low. This would be primarily the same setup that I would look for on a 30-minute or a 1-hour time frame. It just happens that this one was going to provide me the opportunity on a 5-minute chart. And you can see again, if I go to a 30-minute chart, most of the activity happened within the 30-minute bar, and then the final 30-minute bar. So let's go back to the 5-minute. This is where I executed. I got in here at 1.2787. That was my entry, a little test of the level that it broke out of, and then it dropped. Paying attention to where these bars are closing and the information that I'm getting, I was able to hold it to the first target of 50. It blasted through the 50, so I was able to trade it to the 20. Let me show you the 20s. The 20 is going to be the next psychological level. The 20 is down here, and it didn't hit it. It fell down as low as 28, so it fell 8 pips short of my target, and then it popped back up. And then again, analyzing the bars, excuse me, I was able to realize that at that point it's just probably going to pull back up. So lock in profits here at 37. So from 87 to 37, this trade paid a total of 47 pips. Again, from the entry to the final target. The next trade, I took 2 trades on this one. This is the Euro Yen. So the Euro Yen, I was able to take a trade here to the downside on a break. You can see the range, and from the highs and the lows, it's a much bigger range anyway, first of all, so I was likely to get 2 trade setups on this one. Here is, again, an area of resistance from last week. This is when the market closed last week. An area of resistance. It keeps running into this area of resistance here. I'm counting the waves. And what I mean by that is the only indicator that I use is volume. That's if you see any indicators like moving averages or maybe like the RSI or something like that, or CCI. I'm using those indicators as a visual guide when I'm scanning through my charts. They are not the basis for my trade entry. If I'm going to use an indicator that's going to confirm my trade, it's going to be volume. So in that case, I'm going to go look at volume, futures volume, and I'm going to be using either euro, pound, yen, Canadian, whatever trade I'm executing, and I'm using actual futures contracts that are traded off of my Thinkorswim platform, and I'm using my volume indicator. So that would be the only indicator that I'm using. And there's an exercise that I share with a lot of my coaching clients, and when we see an area of resistance or an area of support, regardless, we're going to be counting the waves. We want to see weakness, we want to see strength, we want to see blow-off moves, we want to see up thrusts that fail. The same thing to the downside. If we're going to be trading it to the upside, we're going to be looking for things that I call a spring. That's associated to the accumulation distribution principles that I trade. I won't get into too much detail. I'll just leave it there. But here it was pretty obvious that this whole thing was going to roll over. And what I mean by counting the waves is that there are up waves and down waves, and there's going to be a certain level of volume that's going to highlight either a blow-off move or a reversal with weakness, and then the reversal itself, the selling pressure, is going to be very, very obvious. It's that supply and demand, and volume is going to read that for me. It's not going to be, something like an RSI. People will use RSI or CCI and things like that, and very often they'll trade off of that indicator itself. I know because I used to do the same thing. Back when I first started trading, I used to make that mistake, and I would use the indicator to give me a trade. And that's what I was using to base my trade entries. And that's not the right way to do it, because what happens is you'll start using the indicator at levels where it's not ready to give yet. When you can see that the market's likely to roll over, and at that point it's not going to go back up any further, that is what you see with supply and demand. And you've got to be able to read the charts and use your volume indicator is what's going to highlight that for me. So again, at this point, I knew that the whole thing was ready to give and it was likely to roll over. The entry was at 138.82. Again, psychological levels when I'm trading inside of tight ranges like this. So the first target was going to be 50. It blasted through the 50. My second target was going to be 20. It didn't hit 20. And then it pulled back up, and I was able to close the trade out here at 37. So this first trade here paid a total of 43 pips. So I earned 43 pips, and then you can see what I was doing here. Here's a level of support, and it blasts right through that level of support, and it took out all of the lows. Here I got back into the trade at 138.13. 138.13. Again, psychological levels. Here's 80, here's 50, here's 20. And in this case, there was such an aggressive move to the downside, it actually hit 20, and at that point I was done. I wasn't going to play around with it anymore. It had already hit 3 targets, so I'm out of the trade. And I knew that it all started up here. So at some point it's going to slow down. You can see what has happened here afterwards. So this trade, this second trade here, paid 88 pips. So I earned 43 pips on the first trade to the downside. Again, not double counting, just from the entry to the actual target where I closed out. And then this trade here paid 88 pips. Now the next trade I had here was on the pound yen. I only took one trade on the pound yen. And the pound yen I got in here at 163.95, again using a 5-minute bar chart. And then here 80. I wasn't too sure where it was going to move, because sometimes, you'll get one where the pound dollar will move, but the euro dollar will go sideways. Other days the pound dollar, will move pretty well, and both of them will break out. It depends on what's going on. Could it be economic data? Could it be the dollar? Something where the market's sort of reacting. In this case, it was a decent reaction after the market opened. And there's a lot of information that people are analyzing over the weekend. Sometimes you're going to get a setup where there's going to be a pretty aggressive move, and you don't have to wait until the New York session. Other days, sometimes there'll be a Sunday where it just goes sideways and flat. It doesn't do anything. And then I don't get an opportunity until the New York session. So every day is going to be a little bit different. Every week's a little bit different. But for the most part, I've got to be paying attention to what's going on here and the structure, accumulation and distribution structures that I'm trading off of. So this one gave me an entry at 163.95. Here's 80. I didn't have to worry about that. I mean, that was pretty close, so I knew it was going to clear that level. 50 was the target that I was looking at, but based on the way that candle closed, I was able to hold to the next one. Based on that one, I was able to hold for the next one. Here, it hits 20, and then I'm looking for the 00. Now, this one closed at, I closed out this trade at the 00, but it went as low as 99. So you can see how close I got on this one. And I didn't play around with this one. I was done with this one. I know that when they start hitting, especially on a move like this, first of all, the pound yen, the euro yen, we all know, if you've been trading them for a while, we know that they can cover quite a distance. So I know that once it starts hitting, 3, 4 targets like this, that I've got to lock in the trade. At that point, it's probably going to be or achieve or reach a level where it's done. It's not going to go any further for a little while. I may have to, it may break out again to the downside during the New York session, but I need to lock in profits at this point. I lock in profits on these trades like this, especially when it goes from 95 all the way down here to 00. It doesn't necessarily mean that the trade's over with, but I know that there could be a substantial retracement. And you can see that if I would have continued to hold on to the trade, it may not go any lower than that. Some people will say, oh, I'll hold on to the trade for a few trading sessions, or maybe 18 hours to see what happens. But we know what could potentially happen. Those trades, decent trades, really good trades, you're up 60, 80, 90 pips. You could end up giving back 80 of it, you know what I mean, and end up closing with 17 pips when you could have earned 80 or 90 pips. You have to know how to read the bars. You have to know how to read the charts to identify that it's done, at least on that leg or that extension of that particular move. And I'm looking to lock in profits. Because of this, I have very little drawdown, and I have very big trading profits on these trades as a result of taking profits like this. So this trade right here paid a total of 91 pips. Now I had one final trade, and that didn't develop until a little bit later in the day. You can see what I was doing here. This was off of a 5-minute chart, and this is the Australian dollar. Again, a clear level of accumulation, a breakout to the upside, and I waited a little while on this one. It wasn't like on a test or anything like this. This is a 9-day moving average if you're interested. Again, I'm not using that as a means to get into the trade or to justify the trade entry. I know a lot of people have trading systems based on moving averages. I do not. I read the charts, I read supply and demand, I use volume, and then I get into the trades on these breaks of accumulation or distribution structure. Here, the entry was at 71.81, and I just took it straight to the 00. That was it. At that point, I was done. One of the things I wanted to mention here, that you can see that it just went 1 pip below on that pound yen trade below my target. It's one of those situations where you get lucky, right? You don't know what it's going to do. But again, I was well aware that I had hit multiple targets and I got out of the trade. Some people will look at that and go, wow, you read that really well. Yeah, I usually can read them. I've been doing this for 22 years, every day. So I can read them pretty well. But again, I also realize taking these trades 22 years in a row like this, especially on the pound yen, when it reaches or moves on like a day like this. And again, this is happening not as a result of economic data, but more or less either. And again, there can be technical movement or activity based on economic data. There could be some positioning or adjustments. Sometimes you see some movement just before the market closes on Friday. That could be a little bit of adjustments or positioning. You have to be able to identify what's going on. Who's trading at this time? What are they doing? Why are they reacting to it? And then volume very often will give me a pretty good indicator as to who's trading and how much activity is behind that movement, and how long I could expect to hold on to the trade. So a total of 328 pips so far. It is 2:50 in the morning, California time, so I've got a long ways to go. There may be more opportunities, and I may post another video with the final results at the end of the day. Some days I can close with 800-900 pips. That doesn't happen all that often, and it's as a result of doing something like this, where I get an opportunity when the market's open or during the, let's say, London session, and then it gets slow or it starts to move sideways. And then when the market, the New York market comes online, there could be economic data which would provide more opportunities for me to make anywhere from, and I'm just picking numbers because it's random. I can't say what it's going to produce. I have to wait for the market to react to either economic data or Fed officials making statements, bank officials making statements. Whatever the case is, it could provide another 50 to 100 or maybe even 200 pips. It really depends. But again, I can't do this every day, just when the market provides opportunities. There's other days where I'm only going to make like 40, 48 pips. It really depends. But so far, it's been really good. When the markets start to melt down, or even rally up. When we get these big bearish and bullish moves on days like this and the market reacts big, I tend to make a lot of money. And on other days when it's going sideways and inside of relatively tight ranges of consolidation, I have to do what everybody else is doing, and I have to wait for my opportunities and I don't want to give back profits, and I'm very, very careful when I'm trading inside a consolidation. So again, really good trading opportunities, 328 pips so far. I traded all of these with my funded accounts, and I also use a trade copier. The trade copier actually allows me to execute trades on one account, and it will fill the orders in the rest of them. And I have subscribers that get to use my trade copier. So if you're interested in using my trade copier, you can click the link in the description. It'll send you straight to my checkout page. You can buy the trade copier, the same trade copier I'm using. You can use that trade copier too, and you can get these same trades. So if you're trying to get a funded account, or if you already have a funded account, or even if you're not trying to use a funded account, you're just simply trading your own account, you can use my trade copier and you can get the same trades.